Ashok, this is a big deal. This morning's retail sales, especially that control number, these are really good data points. Matter of fact, if you look at the first half of the year on the control number only against all of 2018, it stacks up pretty impressively.
Yeah, this was a strong number this morning. We saw revisions to previous months. And you look at some of these 3-month averages of retail sales control group, like you were saying, we're back to the run rates we were before this slowdown of 2019. And I think the biggest story is for the consumption side of the economy, we're pretty stable, and these are low but positive growth rates, and it brings a lot of stability to the U.S. economy.
Everyone is so preoccupied, investors all around the globe, about all the uncertainties, especially regarding trade. I get some wonderful research on if you monitor shipments, tankers, freight lines, trucks, that things don't look good. But it certainly seems to me that this part of the economy at least is making up for it. Your thoughts?
Yeah, no, it's true. And we're also seeing some bottoming and improvement in the data for China. And I think a lot of the story is the slowdown is more anticipated by the market based on the weakness in PMIs that we've seen this year. And that weakness has even been pretty moderate.
Now, the PMIs, that's a whole different world to get into, because many of those PMIs have these questions at the bottom, where many of the respondents say even though they are nervous about certain issues, their underlying business still seems strong.
Yeah, I think that's the story. There's a lot of stability in the global economy, and, we think there's a bit of improvement happening now. And, it'll be interesting. The Fed's going to have to navigate this in a couple of weeks about how they want to describe what's going on with inflation, what's going on with global growth, against a backdrop where the hard data now seems to be coming in certainly a bit more on the positive side.
And it brings back that same question about how the Fed's going to reel in market expectations. The market participants are already jumping that this is going to be the beginning of an easing cycle. Yet the data and some of the comments, my Jay, could be interpreted as maybe we're throwing this one out there, but maybe it's not going to go any deeper. Your thought?
Yeah, no, I think this is going to be, and we think this is going to be a short, compact easing cycle. The U.S. economy and the global economy doesn't need that much easing. And the Fed will likely, ease in July and keep open some probability if the economy deteriorates. But, our view is we're not seeing that at the moment.